Ladies and gentlemen, I'm your host, Peter Momo. This is Clariquity webinar, the September edition, and it's a wonderful privilege to have wonderful Nigerians from all across the globe to be on this call. And I'm glad you made it here again for another webinar. It's been back to back since June when we had our first webinar. Many of you were on call, and now September, you are yet on call. July, we had another one. I recall the first one was on we are certain that young Nigerians are already taking over in the political space, in the workspace, in the boardrooms. And that was a good start, an impressive one. And you made it possible. We came to July and we talked about knowing your civic rights, how to be a proper Nigerian and to win. And many of you also joining on the call. And then we moved to the third one on August. We talked about the Code Nigerian tax law, and you came again on the call. And now here you are. I am proud of us. I am very much grateful. This is Clariquity. Our purpose is simple: to engage and to enlighten young Nigerian. And the theme of this September edition is the A.B.C of the Nigerian capital market. We are not here to speak jargons, complex things, or make it esoteric. We are not speaking over your head, and we are not speaking to you as a kid either. But we want to speak just like you have economics 101, political science 101, chemistry 101, a beginner's guide to stocks, to bonds, and beyond. And our speakers are geared up to share insightful tips and ideas to help you. Well, for me, I don't have a jackpot plan. My jackpot plan is currently on hold since Trump has been unpredictable. And so Nigeria is my best option as it is right now. So it has to work for me. It has to work for you. And this is why we are doing this program today. Because as we know, many of us, our jackpot plan has been put on hold. But despite that, there have been massive gains, massive success in the Nigerian capital market that many young Nigerians do not know. This is why we organize this program today. Well, I am your host. My name is Peter O. Momo. I am the co-founder of Clariquity. My founder, Sumari Datnai, is also on this call. And as I'm your host on this call, my job is also to learn with you in how to navigate the Nigerian capital markets. But before we proceed, I want to introduce to you our speakers for the day. We have 4 speakers. The first that will be going for today is Muhammad Suleiman. Then our second speaker for the day is the lovely Miss Tolulokwe. And then our third speaker for the day is Miss Kalista. Then our third speaker for the day is my wonderful friend Yubong. So not waste our time. Our first speaker for the day, Muhammad Suleiman. Muhammad Suleiman is a product manager at Agza Manzat with deep interest in the financial market. He writes on personal finance and investing while sharing simple and practical insights to help young people like you and I make better money decisions. He also consults individuals on structuring their finances for clarity and long-term growth. I've said this before and I'm saying this again. Muhammad is the reason why I invested in the stock market. He remembers the first time I sent him a voice note or sent him a message saying, Mohammed, you have to guide me. And Mohammed obliged me and guided me. I read his article and I was inspired and I made that first move. And so that's why I'm glad to speak from a personal point of view that's going to be speaking to us. If you want to follow him, you can follow him on Substack where he writes impressive articles, or you can follow him on Twitter to get the little tweet of his ideas, or X as we call it. So Mr. Muhammad Suleiman, it's an honor to have you on the call. And here's another news flash for you. Muhammad Suleiman is not a finance student. He didn't study economics or accounting courses in school. I know he's a science student, an engineer to be precise. Muhammad, am I correct on that?
Yes, you're correct.
So I want to know how you pivoted from engineering to finance. So why don't we let the floor over to you? A round of applause as we let Mr. Mohammed take over the floor. A round of applause, please. But Mr. Mohammed, before you start, you have to explain to us how that shifts from engineering to finance and why you are so good at it that you are impacting someone like me. Over to you, sir. Thank you.
Thank you, Peter. Thank you, everyone, for being on the call. Okay, switch from engineering to finance happened when I was around 300 level. I was looking for a way to make money, to be honest, right? You know, when you have that time and you're trying to do the self-help. It was my self-help era, right? So I was reading all the books I could lay my hands on. Rich Dad, Poor Dad, Think and Grow Rich. Everything, the whole, I keep coming across stocks, investing in stocks. I'm like, okay, this is new, but I like the idea. I like the idea that when I buy a stock, I get dividend as long as I keep holding the stock. That's fine. So I don't have to think about anything. Fantastic, great idea. So in theory, yes, it makes a lot of sense. Theory and practical, there's a difference. So that was the spark. And then a curiosity that I kept feeding, I was on Investopedia. I just browsed the internet. I was online reading everything I could lay my hands on. I even did some call it virtual trading. So it's not an actual account, it's not your real money, but you assume that you have X amount of money and then you trade and then you have an idea of how it works. So I did that for probably a year before I bought my first stock in Nigeria, Nigerian Stock Exchange. I mean, but what I was practicing it was US Stock Exchange, and then this is Nigerian Stock Exchange. So there's difference. Let me not say a little, but there's a lot of difference. And then I just keep learning, follow people talk about money, follow people talk about the stock market, and then just continue that way. And I was like, this kind of makes a lot of sense. So why not just do it for a living? And that was how it started. So, and that's where I am right now.
Very well, Mr. Mohammed. Thank you for letting us know how you dabbled into the whole finance sector. Now, show us what you have learned from your personal self-help journey. Thank you very much. A round of applause again for Mr. Mohammed.
Good evening, everyone. Once again, I'll be taking us through simple and practical ways to start investing in the capital markets. So first was the capital markets. The capital market is a place where we buy and sell, aka trade financial securities, such as stocks and bonds. The importance of what the capital market does is it takes excess savings from investors, you and me, that's the retail investors, or businesses, institutional investors who have large funds, excess funds from, okay, you've finished your expenses, you've spent the money that you want to spend, you have an amount that you've saved, and then you want to get something on that amount. So maybe you are trying to get profit. You want to put your money in a profitable business, right? So you are taking this your excess capital and giving it to companies or the government for long-term investments or projects. So businesses, on the other hand, or governments, they need funds. They want to embark on project that will probably take maybe 3 years, 5 years, 10 years, 7 years, depending on the kind of project or investment. These are usually called capital investments, right? So maybe you want to expand your business. You have a small business, you want to open a new branch somewhere in another state, for example. You need money for that too. So investors that have excess capital, what the capital market does is if you are exchanging capital for financial assets. So there are two forms of capital. You have equity, you have debt. So you are giving a business money. What are you getting in return? You're either getting debt or you're getting equity. When you're lending someone money, you give the person money, he promises to return that money in 5 years, for example, with an interest on it, maybe 10% every year. So you're getting your money, which is capital, and interest. That's how debts work. For equity, what you're getting is a piece of the company. You are becoming a part owner in that company. So Peter here is trying to build Clariquity, right? So he wants me to be a partner in the business. He says, oh, Mohammed, give me 20K, and then you get 2% of my business. And then as the business continues to grow, any profit that comes later on, I get a share in the profits. That is the two forms of capital we have. We have equity and we have debt. We've talked about capital, right? We've talked about funds. Now let's talk about the market itself. So the market, you could look at the market in two forms. There's a primary market and we have a secondary market. So the primary market is where these securities are issued for the first time. What does that mean? Peter comes to me and say, oh, Mohammed, borrow me this amount of money for my business. I give him this amount of money. He gives me a bond, right? So I get a certain percent of interest every month, like that, going forward, maybe for 5 years. Now, this is what the primary market does. We are issuing securities for the first time. For example, now let's look at, I don't know if we are aware, but Sterling Bank is currently issuing its stocks, 7 naira. It's already on the market, right? But it's also giving you offer for subscription, 7 naira. So this is also a primary market transaction. I don't know if this makes sense. It's the bank or the institution or the company or the government coming directly to investors, to the public for the first time. Okay, I want to lend this amount of money from you guys. Oh, I want you to buy a share of my business for this price. That is the primary market. Now, for the secondary market, what you are doing is, oh, I've already bought share already, or I already have the bond already. It has already paid me the interest, and I want to just sell it. I want to give it to somebody else. Somebody wants to buy it from me. Oh, I already have a stock of the company. I just want to sell it to somebody else. That's what happens on secondary market. So already issued securities are traded on these platforms. So these platforms are called exchanges. So I've bought a piece of Peter's company. I have 2% of his company. And then maybe I just decide, I just want to sell 1% off. My friend comes and say, oh, Shalom says, "Oh, hi, Mohammed, please sell me 1% of that company. I also want to be part owner." Then I sell it to him. Shalom does not go to Peter. He comes to me, right? So transaction between Shalom and I is a secondary market transaction. So the exchange is just the marketplace, right? Where you buy and sell, where the buyers and the sellers come and meet, right? It does not have to be physical. It can be online. These days it's online, right? It used to be physical. You go down to Marina and then you're shouting, you're bidding the stock literally physically, but with COVID and technology, we do this online. The major exchanges that we have in Nigeria, the very prominent ones, are the NGX, FMDQ, and NAS OTC. So these are just exchanges that we have in Nigeria. These are where buyers and sellers meet and then you do the transactions. Each of these exchange, they have their rules, they have their regulations. Because we are focused in Nigeria, most countries have more than one, but you have one that's very prominent. That's the way generally capital markets are. So how do you participate in the capital market? There are two channels for you to participate. You could go directly via brokers or indirectly via asset managers. So brokers, just think of them as agents. But instead of house agents now, you have financial security agents. So what you do is, oh, I want to buy this stock. I want to buy this bond. Then you meet a broker. Oh, hi guy, I want to buy this. Buy it for me. So he buys it for you because what they do is they match somebody who is ready to buy and somebody who is ready to sell. I cannot be willing to sell at 10 naira and nobody is willing to buy from me, right? So what brokers do is they are just matching the person who is selling and the person who is buying, and then they get a commission of the transaction. They get a percentage of the transaction fee as commission. For asset managers, what they do is they have people invest in the fund. So what you do is a bunch of people put in their money, they pull it together, and then they invest. So what asset managers do is they invest on behalf of investors. So anybody that is putting his funds with an asset manager, it is the asset manager's responsibility to invest that fund according to what they say they're going to invest. Next slide. These are the major difference that you can look at between the brokers and asset manager. So they execute the trade for you. You have the responsibility. You are making the decision. I want to buy MTN stock instead of Airtel stock. It is your choice, not the stockbroker. The best the stockbroker can do is, oh, why are you buying MTN? Advise you to buy it. At the end of the day, you are the one calling the shots. You have direct exposure to the capital markets. You have the time. So people that usually use the stockbrokers are people that have the time, the knowledge, and then you can make your decisions yourself. So all what you do is, oh, I want to buy this. They find a buyer, they find somebody who is willing to sell to you, and then they take a commission and they're off. That's what brokers do. For asset managers, you are putting your money in the fund. They also have other people putting their money, and then this amount of money is pulled together and then invested. So the asset manager has discretion. He's the one that decides what he's going to invest in, but he does not just do it blindly. There's a trust deed, there's a document, a documentation that tells you what the asset manager is going to invest in, right? So it's every fund would have what they're investing in. They give you a range of what the assets they can invest in, the securities they can invest in, and then a percentage. Oh, I can invest in stocks, maybe 10% to 50% of the money in this fund goes to stocks. 5% is just left in cash. So 3% maybe is in fixed deposit. The rest to buy bonds, for example, right? So that is how it works. So whatever investments they are making it on your behalf, and they have to act with your interests at heart. So it's a fiduciary duty here. A short recap: brokers are people who just execute trade for you. They and they get charged based on commission. So you have the discretion. They are just the intermediary. They do it for you. They find a seller or a buyer, and then they match you people together. And then the trade is executed. They take a percentage cut as commission. For asset managers, you are giving them the money, and then they invest for on your behalf, right? So you don't have the time to make the decision, or you don't have the knowledge, then you go with an asset manager. So before selecting an asset manager or a broker, make sure the institution or whoever you're going through is licensed. You can check the SEC website. I've added the link at the end of the slide. So you can always check the website to ensure that the person is licensed and regulated by the SEC. Make sure that they are always available. You don't want a situation where you want to buy a stock and then the next you've contacted your broker, for example, and then they are not available, and then the stock price changes and you're unable to buy again. You want to make sure that their customer care or customer support is good, top notch. You are able to, their platform is easy to use. They are not so much funny looking websites where X, you click on X, it's giving you Y. Then you look at their fees. So all these, apart from the first one, which is very important, is absolute. The other ones you tend to compare it with their peers. Oh, you are comparing stock a broker A with broker B. You are comparing their fees. You are comparing how easy it is to use their platform. You are comparing their customer care. You are comparing their uptime and availability. So you have that. Asset managers too, same thing. You are comparing A to B. Be sure that okay, this is better than this based on one, two, three. That's the these are some selection criteria. So let's say you've decided, oh, you've gotten a broker that you want to use. Easy way, you go on the website, you create an account or maybe download the app, you register. They would offer you how to pay money. It's either you use a payment gateway, maybe Paystack, Flutterwave, or they give you a virtual account or a registered account with their name. Again, make sure they're registered with SEC, and then make sure the person you are transferring, the institution you are transferring it, the bank account you are transferring it, is carries the name of the registered institution. I don't know if it makes sense. So yeah, you've checked that ABC broker is registered with SEC. When you're transferring the money, you're transferring to CDX. So I'm sorry, affiliating with your money. So make sure that it matches. Now transferring to ABC, make sure that it is ABC that is registered. Then once you are registered, again, these are brokers, so the discretion is with you. You funded your account, and then you're off to buying your first security. You have the time. Again, the reason why you're using a broker is because you have the time, you have the knowledge, so you can make your investment decisions yourself. So for asset managers, this is a further another filter, right? Apart from the first one. So because asset managers have different funds, one asset manager can have as much as 12 funds, 3 funds. So you have to be very careful which fund you are buying in. Not because it is risky or because you are going to waste your money, but because because an asset manager is offering 5 funds, does not mean any of the funds suits you. You have to look for suitability, which one makes sense for you, right? So you have to review the prospectus of the fund. So this is documents where they give you more details. Oh, this is what we are investing in. This is how we are investing in the funds you've given us. This is how we are deploying it. So we are investing these funds, maybe 10% here, 70% here. So each of these underlying assets would affect the performance of the fund. So you find out the minimum investment amount. Some have as low as 5,000, some 10,000, some 2,000, right? The holding period. So when you buy the fund, some tell you cannot sell, you cannot exit the fund until after 30 days, 90 days, 180 days. Again, everything here you find it on the website or in the prospectus of the fund. So different funds would have different, it might be the same asset manager, but they have different funds. So each of these criteria will be different. So their dividend or interest payment, some pay quarterly, some might pay twice a year, some it's just yearly, right? Again, depends on the fund and depend on the asset manager. Then the liquidation or redemption policy, they tell you that, oh, you get your funds in 24 hours. Oh, no, you can't get your fund in 24 hours. You get in 3 to 5 days. And the last one, their recent performance against peers. So let's say you have asset manager A.B.C and asset manager B.C.D. They are offering the same product. Let's say equity fund. The two of them have equity fund, and then you compare their performance. You can always find this performance on the SEC website. They list all the funds and all the performance on a weekly basis. It's updated weekly. So you look at the performances against peers. But point of notice is that because Fund A had performed well before, does not indicate that it will continue to perform well. Past performance is not an indicator of future performance. Please take note of that. So you want to invest indirectly in the capital market via an asset manager. What you do is you open an account. Again, you've gone through this, you've selected which fund, which asset manager you want to invest in. So you open an account, you buy the fund, you buy the fund's unit. So what you are doing is you are buying units of the fund. The fund itself is now invested in different securities, and that is how you are invested in the capital market. So you are investing in the capital market with an asset manager via the fund. So the fund, at the baseline of the fund is some securities. It might be stocks, it might be bond. Again, depending on the kind of security, depending on the composition of that fund, which you'd have checked before selecting. So once you buy the fund units, you're already invested in the capital market. Then all you have to do is keep track of your investment. So you look at performance weekly, monthly, however you wish. So when you're opening an account, either with a stockbroker or an asset manager, you tend to have this question: oh, valid means of ID, your passport photograph, your signature, recent utility bill. These are KYC. So the way you open a bank account, you fill a form. Now we tend to just do it online, but you still have to submit these documents. Either submit it, you send it as an attachment in your email, or they give you a place to upload it on the app on their website. So final words, just to round up. Um, Keep learning. Again, this is just a surface level explanation. There's a whole lot to learn. This is what 15 minutes, just talking for 15 minutes, right? So there's a whole lot to learn. You start small. Don't think you have to have 1 million before you start. You can start with as low as 5,000, 10,000. Experiment, be flexible, do your own research. Because somebody saying you should buy A does not mean A is the best thing for you to buy today. That person bought stock A does not mean if you buy stock A, you make the money he made. Oh, they're giving you, oh, if you invested 10,000 in January, by today you have 10 million. Please be careful. If you are not invested by that time, there's a reason why you're not invested. If you don't know about it, please don't go and put your money. Your money can burn. It will disappear in your eyes. So please be careful. You're taking risk, which means there's a potential return or there's potential loss. So that's the market works. Be open, be flexible, experiment. So A might not work for you. Don't be afraid to move to B, right? B might work for you. And maybe because we are growing, we are not stagnant in time, because it worked for you before, does not mean next year to work for you. Again, be open, be flexible, don't be dogmatic. Please don't be dogmatic that it has to be A, it has to be A. Market changes, the time changes, the environment changes, you yourself are changing. So again, be open, be flexible, do your own research, start small, and keep learning. Thank you very much. Yes.
Come on, a round of applause for Mohammed. A round of applause. Thank you so much, Mohammed. We are grateful. We are honored. We are thankful for all you have espoused to us. Please, a round of applause. Come on. We want to move on to the next topic. But before we go on to the next topic, two things stood out for me that he said. He said that because a fund is performing well, perhaps in a given year, does not mean that that fund will perform well the next time. And because someone told you that a stock is doing very well, and therefore you just want to pump all your money, he emphasized on starting small, doing your proper research and your investigation and due diligence. A whole lot of things he has said. I hope you have learned. And the next person will now go into details to go into telling us the different investment options. Thank you so much, Muhammad, once again. So I will not eat into the next person's time. Permit me to welcome our next speaker on the call, Miss Tolulope Olaosebikon. From food technology to finance, Tolulope is forging a bold new path as an analyst and product manager at Coronation Wealth, where she leads the investment academy. With a unique blend of creativity, leadership, and innovation, she's redefining how financial education is delivered, making it engaging, practical, and impactful. Okay, I'm not surprised she's passionate about food, finance, heart, and transformation. Tulokwa is driven by big dreams, perhaps to be our president, and an even bigger commitment to turning vision into reality. Tulokwa, just like Muhammad told us how he transitioned from engineering to finance, please, what happened that you left your sweet food, with all the spices to come to finance where there's a lot of heart attack, heartbreaks, and some disappointments, when people are investing? And hope your hearts have not been broken. So tell us, uh, what caused the transition? Over to you, Tolulokpe. Thank you very much.
Good evening, everyone. So, yes, definitely. Should have been fun. But then, the situation of Nigeria, and I don't say the payment, the salary or something, but so far, with the average, finance still gives like a larger amount compared to food. So, at least now I'm chasing the money. When I start chasing the passion for food, after I've gotten it, by the way. So, I spent 5 years studying food technology. I got BTech, not BSc, for because I like to prove. And uh, while I was in school, I wanted to try investing. And my friend spoke to me about Rocksteady. Yeah, I decided to invest in Rocksteady. Sadly, I invested the last month before they crashed. And hmm, I just zeroed my mind on probably my edge do not carry investing in something that I'm making money that does not belong to me. Do you get? So since then, I didn't invest in anything. Let's say, come NYC, that's 2021, 2022, I spoke to a friend that wanted to teach me crypto. So I started, I literally paid attention to it. And first, it was very annoying because I had to download like 6 to 7 apps. Sharp. And then having to switch to dollars to buy crypto and stuff. But then it wasn't forthcoming and it was quite heartbreaking because I would invest then today it goes up by like 10%, 12%, even sometimes 60. And then tomorrow I'm seeing it as minus. My mind could not take that, right? And then while trying to apply for graduate training roles, I found coronation. And then while I entered, or during the time before entering, I realized it was about like investment, stocks, funds, and everything. And I was like, maybe God has literally seen my heart for investing. I decided that let me bring it to you, right? And basically, that's how Um, I started venturing into Nigerian stock markets, capital markets. So I'll be teaching everyone regarding the investment options, just basically breaking down what Mohammed has talked about. So as Mohammed has broken down, investing is the process of buying assets that increase in value. Emphasis on increase in value over time and provide returns in form of income payments or capital gains. So this is the review of financial instruments. Basically, financial instruments are the things that you can invest in the capital markets. Just in case this English is extra. So we have debt instruments like Mohammed mentioned earlier. They can be bonds, they can be treasury bills or commercial papers, which I'll break down soon. Then we have equity instruments. These are the stocks, some types of mutual funds, and basically we call them mutual funds also, and ETFs. Then derivatives, which are forward contract of futures. This is, I know for people that trade and buy oil, so you can buy palm oil now in Ilori and keep it for like the next 7 months, knowing that it will like the price will go higher, then you sell it then. That's basically what derivatives, that's the like overview of what derivatives is about. Then alternative instruments like real estate, private equity, crypto. So now I'll be breaking down what each instrument means. First, we have equities, shares. They represent ownership in a company, like what Emma said. So I want to be part of First Bank. Not like I'll be able to like make some changes in the First Bank, but at least I want to, if they open branches or they currently they increase sale or the increase quality, or their company is getting better, basically. Let me just say getting better. I want to be a part of it. Yes. So like Sterling Bank now, they released their rights, the offer is at 7 naira. Now I've heard that Sterling Bank is entering tech, is entering medicine and everything. I'm like, okay, this will look like they will blow. Let me buy it and just be a part of their ownership. So when they win, I'll be part of their winning and I would basically get my benefits. Then thing about equities is because it can make you money fast, it can make you lose money fast too. I'll give an example. So I invested in Ella Lakes about last 2 months while it was 4 naira. Ella Lakes moved from 4 naira to about 16 in 2 months. I mean, that's like over 300%. I feel so proud. Over 300%. And they dropped. So during the rise now, people started buying it more, of course, because this thing's growing. Buy it, buy it, buy it. And then probably somebody would have bought it at 12, 14 before it got to 18. And then it dropped. Right now it's at 12. But I'm taking a part of my profit share just in case. So as part of Ella Lakes blowing, now it's coming back, but it's not going, it would go as down as far again. So that's basically what that's my win. I've not shared my loss. Exactly. My loss. This person talks about buy FCMB shares. I like they're going to blow and everything. I say, God, okay, let me go and buy it. I trust this person. I've been already since the time I bought it. So that's an example of equities. Then bonds. Bonds is like basically you're lending government or big corporations money to use to make some changes, and then they'll pay you back at a particular time. Just you are loaning them literally. So let's say you are loaning government 500,000 now. That after 3 to 10 years, 1 year, 3 to 10 years basically, because they're usually a long period of time. But they'll pay you interest in between, just like probably like twice or 3 times during that time before paying you the actual money. So just like when you go to take a loan, they'll pay, like when you're going to pay back, you pay loan and you pay interest. So if you lend to the government will pay you the money they lent you, and the money you lent, sorry, they'll pay you the money they borrowed and pay you interest. Now it is safe because your money can never go down. It's higher it goes, it can only go high, you get. But it doesn't yield much, you get. It doesn't yield much compared to others. The good part about government is that they cannot run away with your money. Yes, they'll go and print more money. You get, they cannot run away, including Nigerian governments. For people that don't have trust in governments, they will not run away with your money. Then we have treasury bills. Treasury bills is like bonds, but just like it's short term, right? So while bonds is 3 to 10 years, treasury bills is like 3, 6 months, 1 year, and then you get your interest at the forefront before you get your money. So let's say you want to do a treasury bill of 500K, you probably get like let's say 5 million, please. Let me know. Let's say 5 million, right? And they're going to give you 500K as your interest, or 700K as your interest. Once you pay the 5 million, they will give you your 700K. And then at the end of the 6 months, at the end of 1 year, they pay you your 5 million. That's how treasury bills run. And it's also government. So they cannot run away with your money. Though the percentage is not as high as stocks. So just in case, that's why people invest in stock. Then we have mutual funds, which is the one I started with, which is the one I love, which is my savings. So mutual funds, let's break it. There are actually there are other types of mutual funds. I'm going to break it into two. So now we have the money market fund, right? Money market fund, they invest in treasury bills. So like they gather everybody money and invest in something. Let me give an example. So let's say if the government or a corporate body like Dangote now, Dangote need probably like 500 billion to do something, and they have a return of 20-25% at the end of a year or at the end of 3 months, something. Now, one person cannot have that 500 billion triggers. They can't have it. So they gather everybody. So everybody's bringing their 100K, their 50K, even their 5K. their 10K to join the money to make it 500 million to invest. You get. So by the time we get the returns, they share the returns on the percentage, like returns on with everybody, and everybody gets to make their money. That is what mutual fund is about. So let's say I want to invest in let's say I want to invest in this the I'm trying to give an example. Can anyone give me something that's going on now that has to do with the government?
Yeah. And then I
Okay,
think
so
there's I don't know about the Calabar Road that David
ah,
Umahi, the minister, was trying
thank
to
you.
see how to raise money for that road. Yeah. Go on, ma.
Yes. So yes, this is Caliber Road now, and they're saying that they'll give you like 25% return on your investment, right? And a mutual fund is managed by an asset manager, just to link to what Mohammed said earlier. So the asset manager will collect everybody's money, right? And put it in this fund or loan it to the Calabar government to fix the road. And then when they pay back, the money they get, they spread it amongst everybody. So that is money market. But the good part about money market is you like Mohammed said, there are periods of times that you can retrieve your money. For money markets, usually 1 month thereabouts. So after 1 month, you can collect your money at any time without being penalized. You get. Then balanced funds, they invest in 60% stocks, 40% bonds. Meaning, if you invest the money inside, the money can go down. But it will not go down to the end. It will not fall because they also invest in bonds. So they are trying to put stability to get. That's what balanced funds is for. Then commercial papers. This is like treasury bills, but it is for private companies. You get. So just like treasury bills, you're loaning to the government. Commercial papers, you are loaning to private companies. But instead of certificates, it's basically a note. So maybe let me give it. I'm trying to find the perfect example. Okay, so let's say somebody gives a note that if you give me this amount for this period of time, I'll give you this amount back, right? And I'm going to give you this amount of interest. So because
Yeah, I
the
think
risk,
Dangote did it, and then MTN to use
yes,
maybe
definitely.
that could help.
Yes. Yes, thank you. So Dangote will say, of course, with Dangote run away, will his company spoil? It's spoiled. There's not too much for his companies to go down, you get. So if you invest in Dangote now, after a period of time, you get your money back. But the yield is higher than T-bills because it is a bit riskier than T-bills. That's treasury bills. It's a bit riskier. Then we have derivatives, which is what I explained earlier. Probably somebody wants to make Gary now, yeah, knowing that in December Gary will be scarce. So maybe if one bag of Gary is about 30K now, in December it might be like 60 to 70K, right? So me as an investor mindset, I will give a Gary maker 30K that I'm buying one bag of Gary. You are going to give me that Gary in December because I don't have any place to put it in my house. You're going to give me that Gary in December so that I will sell it for 60K, right? And that's what derivatives is about. So they could be the one where you give the money, the person does it and then gives you in December, or you guys have you guys have a word, basically. You're telling the person that in December I will give you this 30K for the price of Gary, and you will give me the Gary, whether it's 60K, whether it's 90K, you're going to give me the Gary. We've shall agreed on this ticket. So that's what those are the two major types of derivatives. Then private equity, these are for big money people, people that have 10 million, 20 million, 100 million to invest. So we have some companies, some private companies, people that are not listed on the NGX, like Providus. Providus not listed on the NGX. Now, the interesting thing about Providus is that Unity Bank is collapsing and they want to merge with Providus. So people that have Unity Bank stocks, either they get the money for their stocks, or they can be integrated into having Providus stocks. She gets. So I mean, you didn't have to pay so large money, and then you're part of Providus's ownership, basically. So you could get into private equity like that, or if you have a large sum of amount, or if you trust your friend. It doesn't have to be something so serious. I am involved, or I have this asset in the private equity. So this girl runs a business, and basically you can employ the services of Peter, yeah, the lawyer. So you guys will draft the agreement and everything that after this thing, you will pay me this particular amount, or if he use more, I'll get this percentage, basically, just like I buy percentage of ownership, but because it's private, right? So it's just basically the buying of stocks of companies that are not listed on the Nigerian Stock Exchange or FMDQ or NASD, like Mohammed mentioned earlier. So you can also do it with your friends, as long as you can trust them, as long as you have the papers ready, like you said. Then real estate investment trust. So you want to buy land in Ikoyi, you want to buy land in Atlantic City. This person pulls the fund, right? Pulls the fund, buys the house. But this time, you're not buying the house for you to live in. You're buying it to sell so you can gain money. So let's say at the time where they are building Atlantic City, now a group of people, which I know they would have done, contributed money to buy about probably 2 units, 2 houses, 3 houses, 3 apartments instead, 4 apartments. And then after they are done building it, they can decide to rent it out. Anybody that rents it, they pay the rent to everybody that contributed the money. You get. So the rent goes to the people that contributed money to buy the apartment. That's what real estate investment is. The commodities, this is trading physical assets like gold, oil, agricultural products. You don't have to physically trade this product. So you can do it online. LCFE is one of like the popular commodity trader. They have crypto, which I mentioned that there's so much shaggy, many apps, and as much as you can go high, you can go low. So knowing your risk tolerance, knowing what okay, is it that you don't want your money to go high or go low? How far do you want your money to go high? How far do you want your money to like? How far can you lose this money? They will say that if not to invest, you use the money that you can lose. True, and also because most of us are young, you have the money to make like you can make it back. A pensioner would not go for stocks. Most likely not go for stocks. Most likely not go for crypto or venture capital or high yield bonds. They'll most likely go for normal bonds like government bonds, mutual funds, or probably try to keep their money in savings account. So mutual funds best, like money markets, that kind of thing, or fixed income fund. So a conservative person that you can mention a pensioner, that kind of thing, someone that is quite old, that they've made so much money that they can't afford to lose. Then moderate, which is where I am, even though I'm supposed to be an aggressive, which is where I am, I can lose money, but I can't lose so much. My peace of mind is important. Then aggressive, these are people that don't care. Everybody investing in crypto right now, everybody investing in Forex, they're aggressive, please. Carry that energy. Everybody that is betting, they're aggressive. You carry that mindset to buy stocks. Carry that mindset to buy stocks. And that's how you know what you're comfortable with and what option you should go for. So this is basically an asset allocation plan. You can work with an advisor, but this is just like an illustrative one. So for someone that is aggressive, they will invest like 70% of their income in, or 70% of the money they have to invest in equities, then do little in fixed income, have 0 to 5% cash, or and invest 15 to 20% in alternatives like real estate and crypto. Someone that is moderate would, which is where I am, would invest 35 to 45% in fixed income, 35 to 45% in in equities, 35 to 45% in fixed income. I would say that I'm investing like 20% in equities, then like 60 to 70% in fixed in money markets. That's where I'm sure that I know my money cannot drop. Then I'm having like 5 to 10% cash. And for alternatives, zero is on my side. So you just pick which one works for you, and it doesn't have to be this particular percentage line. Just find which one works for you and then start. So your next steps, set a clear goal. Why are you investing? Are you investing for retirement? Are you investing for the house? Like me, I'm investing in my money market fund for like as my lifetime savings. I'm investing in stocks for my children. So that's what makes me sleep well at night. That's what keeps me happy because I mean, at the end of the day, if FCMB is showing red, I know that in the next 10 years, FCMB will not go out of business in Jesus' name, amen. It won't go out of business. So in the next 20 years, so please, I'm using prayer to push it. Thank you. So I know that even if I don't see the get benefits now, I would get it then, or my children will live to get it instead. Then pick an investment advisor. You can go for Coronation, which is where I work. Yes, go for Coronation. Stanbic also. ARM. There are many. Axel answered. They're not sure. Just probably just pick one and start investing. You could also search for their apps. Because someone like me, I don't like to interface with customers. I rather just do app and know that I don't have to call somebody and stuff. Then three, develop a strategy that match your risk tolerance. So, like the way I said it, I put 20% in equities, put 70% in money markets, because that's what works for me. Now you check what works for you and then float it. And then you can start investing. The calendar decoration was up today. I get started. Now, yes, so our coronation, we believe that the greatest barrier to wealth creation is not opportunity, but it's knowledge and access. True. A lot of people believe that you need to have large sum of money to buy stocks, which used to be true in the past, which used to be true, but now they're making it very accessible, and because of that, Coronation Wealth launched the Investment Academy and Fantasy League. So Investment Academy is like Coursera for investments. The courses are free. You just go on it and read it at your time, at your pace. We have certificate courses and we have nugget courses. Nugget courses, you finish it in about 2 hours, an hour max. Then for certificate courses, you can finish it in like 45 hours. Our flagship course is the NGX, Nigeria Stock Exchange, a beginner's guide to trading that has every single thing you need detailed in it. So you can just go to the academy to get started. I'll put the link on the chat. And then Fantasy League, like what Mami mentioned earlier, that he tried to invest in stock market, but he didn't invest in Nigerian stock market. So Fantasy League is like a demo. How do I explain it? Okay, let me just go straight to the point. So if Fantasy League, you're giving 100 million naira virtual audio money to invest in real-time stocks. So this stock, you're giving the stock updates, the real-time stock updates actually. So if sterling is 7.55, which is 7.55 right now, you would buy it at 7.55. If it grows, you just basically see how the stock will go down if you were actually investing your money. So you can use it to learn. Then we have the Wealth app where you actually invest. You can also invest in mutual funds, and you could also buy third-party insurance for those that have cars. I think the government mentioned that it's important. Like it's compulsory to have it. We also have other instruments coming up like commodities, and we also have fixed income funds. Basically, everything in investment that you like to work on. Thank you for staying and listening, and I hope you got some things
Come on,
and
we've
you go
learned a
action
lot
them.
tonight. Wonderful. A round of applause, please, to Madam Tolu. A round of applause. Thank you very much, Tolu, for taking us through. Thank you for also being truthful about your heartbreaks in the market so far. So it's not all that glitters that is gold, but we have prayed that FCMB will survive. So FCMB will survive because of you. Perhaps I will take that leap of faith and go and invest in FCMB. Please, that is not a
Amen and
financial advice.
amen and amen.
Please, that is not a financial advice. Disclaimer. All the same. Thank you very much. So We have listened to people that did not never work, never studied finance as a background to whatever they are doing right now. Mohammed from the engineering side, which is a motivation for those of you in the sciences that you can enter into the Nigerian capital market if you are willing to study, to research, to do your analysis, do your due diligence, just like many of us do our due diligence for crypto, even though it is more complicated and layered. That means you can join the Nigerian capital market. And now Tolu is also emphasizing that beyond the stocks, beyond the shares, beyond the equities, there's so much more that she has mentioned. It's not left for you to build on this foundation. And as she has rightly guided you, there are many people that can give you those exposure. You can start with Coronation, there's ARM, there's Chapel Hill, there's Cowrie Wise, there's Afri Invest, there's Stanbic is there. There are different companies. If you are willing to start to look for, you will find. We'll get to that shortly. Not to waste our time, we just have two more speakers and we'll be wrapping up for the night. Now we now go to our our third speaker for the night. Please still do us the honors of reminding your friends and colleagues that they should join in and hop in on the call quickly because we will be rounding up very shortly. But before we get to that last mile, let's have our third speaker in the person of Calista Chileke. Fortunately, we now have someone that studied finance-related course. Calista is an investment research analyst at ARM Investment Managers, where she plays a key role in the company's investment research team. She is primarily responsible for covering the Nigerian consumer goods sector, conducting in-depth equity analysis, building and maintaining financial models, and producing high-impact research reports for institutional and retail investors. In her role, Calista tracks key macroeconomic variables, industry trend, analyzes company performance, and provides forward-looking investment recommendations that support the business and client investment decisions. Calista, thank you for joining us on the call. Calista, you have an economics background, so safe to say you have an edge already. And so, is that a secret for how bold you are when you were speaking on national television? Just in case you're on this call, you should go and check out Callista's videos on YouTube. The audacity, the boldness to call the figures, to call the numbers, and predict like a prophet and say this is what is likely to happen. Callista, where did that come from? Before you start with your presentation, over to you, ma.
Okay, good evening, everyone. The way Peter had hyped me up, I'm not sure if I can get past this. So, I would say,
You can.
maybe my background in economics just, helped to set me up for a career in the financial line of things. But I would say it's the only thing. There's been a lot of self-learning, self-development that has gone through there. And just like the other speakers have, spoken about, regardless of whatever field you're coming from, there's still a possibility, and it's still possible for you to get into finance. You can pivot into any line of any career line, regardless of where you're coming from. So that's just what I'm going to say.
Very well. Now, please, this teacher motivated us. Now, motivate us on being very careful on on what to do, what not to do as we are trying to navigate the capital market. Thank you, ma'am.
All right. Thank you. Good evening again. Peter reached out to me and said, "Oh, I'm going to be making a presentation on the investors' roadmap, smart approaches, help everyone understand the risk involved in investing, as well as diversification and optimizing our returns as beginner investors." Just a couple of things that we'll talk about, just to touch on a few of the headlines in this topic. I will start first with what is an investment roadmap. So, what is an investment roadmap? So, an investment, just think about it like your personal GPS for your money, where your money is going. It's basically a plan that just highlights your financial goals. So what are you saving for? What are you investing for? Is it for a wedding? Is it to pay school fees? Or is it to cater for your kids in the next 20 to 30 years? So what exactly are you doing with your money? That is what an investment roadmap shows you. And importance of this roadmap is that it builds discipline and consistency, particularly for investors or for you who wants to invest for a long period of time. So our young people on this call, we all have different aspirations, different goals. We want to be able to send our kids to Ivy League universities. It's from now a start, and that is what having an investment roadmap helps you with. So no more impulse buying or fear of missing out trades, stuff like that is the importance of having an investment roadmap. It also helps you to manage risk, particularly in volatile markets like the Nigerian market, or of course Nigerian stock market. So during periods of volatility, particularly during like COVID-19 or a very high inflationary environment, you will see the importance of an investment roadmap. And then finally, it helps you to align with your goals. So whatever long-term goals that you have as an investor, an investment roadmap will keep you in check and make sure that your money works for you and not against you. Yeah, so core pillars of a smart investors roadmap. The first one would be, risk identification. So you have to be able to identify and mitigate against potential financial losses. So risk are basically things that could, or factors that could, have financial impact or financial losses on your investment. So an investor's roadmap or a smart investor's roadmap will help you to identify, risk involved in investing. The next one is diversification. Diversification is basically your safety net. So it helps you to spread your money across various asset classes, just like Tolu has told us, has explained to us the different asset classes that you can invest in. So it helps you to not put all your money in just one stock or just one sector. You should, spread it across stocks, bonds, real estate. You can diversify into global markets, invest in dollar, that sort of thing. So that is what the investor roadmap helps you with. And finally, another pillar would be optimizing your return. So that means growing your money smartly, balancing risk and reward in a manner that helps you to attain the highest returns possible. So whether it's through active investing, active stock picks, or passive investing, if your goal is to pay your loans, or for the is a long term, you have a long term goal, or you just basically want to beat the inflation rate, um a smart investor roadmap will help you with that. So we'll just go into understanding risk in investing. So like I said, risk are basically could factors that could have negative impact, or could make you get losses in your financial investment or your savings, basically. So there are different types of investment risk, and the first one we'll talk about is the market risk, and that's where a lot of research comes in. So for market risk basically involves economic events that cause price swings. So usually when we see the release of key macro variables or key macro data like inflation, interest rate, GDP. Typically, what we'll see in the capital market is investors responding to how those variables performed for that period of time. So usually when inflation is out, or when interest rates, or when the MPC, the Monetary Policy Committee, decides on the direction of MPC, of the MPR, that's the interest rate, we'll see if they, let's say, recently they cut the interest rate, right? They cut it down to 27%. So typically what we should start seeing, or what we should see in the capital market, is yields in the fixed income space going lower, and then a lot of traction into the equities market. So stuff like this is what you as an investor, you going into the market, should watch for. So like both speakers before me have said, you have to do your research before you enter into any investment. Another type of risk that we have is credit risk, and credit risk involves assessing whether an issuer is able to, repay back your investment. So for investments like bonds, treasury bills, commercial papers, they all have credit risk, particularly the commercial paper asset class. So when you are investing in a commercial paper that's put up by a company, you need to assess their financial statements to see, if I give this company my money, am I going to get, are they going to repay me back? If the answer is no, or if you're not sure, then it's better if you don't go into, into that investment. The liquidity risk is the tendency that you might not get the money, or you might not have short term, you might not, the investment might not be liquid, right? So if you're not able to sell that asset as soon as possible to get money in a short period of time, within 90 days, then that asset, has liquidity risk. And there's some stocks within the equities market that have this type of risk. So you buy this particular stock, and then you hold it for a a period of time, and then you're trying to sell it now. It is going up, it's gaining, but you're trying to sell the stock, and then nobody's in the market to buy it, and you're wondering, like, this stock is gaining, so why is nobody buying this stock? So that stock or that asset is what has something that we call liquidity risk. And then we have inflation risk. And inflation risk is basically the risk that comes with inflation trending upwards. Nigerian inflation rate currently at 21.12% means that your money is basically losing value if it's growing at a much, much slower pace than the prices of goods and services in the economy. So if you are keeping your money in the bank and they're paying you an interest rate of, let's say, 5%, your money is prone to inflation risk. So that is basically what that is talking about. And then geopolitical risk. Geopolitical risk involves, events that happen in the government, or both domestic and in global. So one thing I like to say is that global events usually trickle down into the domestic economy and shape how the domestic capital markets um, perform. So when we saw the whole trade tensions and the whole trade tensions issue between US and the rest of the world, start, what we saw in the market was what we saw in the market was that crude oil prices, started to, trend downwards. I know how dependent the Nigerian economy is on crude oil prices and our oil and gas sector, basically. So what we've been seeing for the most part of this year, since the whole tariff issue started, is that players within the oil and gas sector have not been performing well in the stock market. So, little issues like this, if you see stuff on the news about something maybe happening in the US or in the UK, try to think about how that will impact us here in Nigeria, because I'm sure if you trace the transmission mechanism, there's going to be an effect or an impact on the Nigerian capital markets. All right, so smart risk management. So what we like to say is risk cannot entirely be eliminated, right? So you can't just be in your house and be saying, "Oh, I don't want risk, I don't want risk, I don't want risk. I've eliminated risk from all my investment." That's not possible. You can only manage your risk. And how do you manage your risk? One, you can get into asset allocation, basically distributing your investment into various asset classes, just like we've learned today. So into various investment like equities, bonds, alternative investment, private equity, just to balance, your returns and all. And also liquidity planning. So you must ensure smart risk management. In order for you to manage risk, you must ensure that a little part of your investment portfolio, your portfolio includes all your investments across asset classes. So in your portfolio you could have a little bit of equities, a little bit of bonds, a little bit of treasury bills. Inside our portfolio, you must have, small cash that will enable you to solve emergencies or your short-term needs. So you must be able to, have access to some form of liquidity. Then also, in order for you to manage risk, ensure that you do some regular rebalancing. So in your portfolio, you might decide that you want to have maybe 50% of your portfolio in equities, right? Maybe you are a balanced or an aggressive investor. You want to have 50% of your portfolio in equities. And then over time, maybe the stock market is doing so great, right? And then the percentage you've allocated to equities crosses the 50% and is now up to, let's say, 75%. You would want to, rebalance your portfolio in order to go back to the initial 50% you know, that you want. And also diversification is another point. Diversification is basically, spreading your exposure across various sectors, across various asset classes, so that you're not impacted by maybe one negative event that happens in one sector. If you are heavily exposed to, let's say, the oil and gas sector, so for an investor or for somebody who had like all his investments in the oil and gas sector at the beginning of this year, the person's portfolio currently will be in the red because the oil and gas sector has not been doing great so far this year. But if he had maybe a little bit of his portfolio, his investments in oil and gas sector, a little bit in consumer goods, a little bit in bonds, a little bit in treasury bills, you see that his portfolio would be the impact or the negative performance of the oil and gas sector would be overshadowed by the positive performance in these other sectors and asset classes. Then finally, we have hedging. Hedging is basically using instruments like maybe or other commodities like gold to protect against market downturns or inflation. So basically investing in commodities, investing in futures options to just hedge against a high inflationary or a high currency risk environment. Now I'm not going to dwell a lot on risk appetite because I saw that Tolu already covered that in our presentation. So basically, what you like to do is to assess yourself and try to see what type of investor that you are. If your heart is always beating anytime anytime they say bring your money and put it in this investment, just know that you don't like risk, right? If your heart is always ding, 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 every time they say bring money, let's invest in this land, let's invest in this stock. Just know that you are not a moderate or an aggressive investor and your risk tolerance is very, very low. So it's better for you to stick to investment opportunities or to asset classes that you are sure would give you returns, right? So low risk instruments. Then moderate investors, if you are indifferent basically on the type of investment that it is, but you still want returns, then you are a balanced or a moderate investor. And then aggressive investors are those who can take the most risk. You don't care if you are going to lose all your money. You don't care if you gain all, you get 100% returns or you get 0% returns. All you want is just want your money to be working somewhere for you. Then you are an aggressive investor. All right, so let's just speak about various asset classes and their risk and return profile. So for the equities market, stocks for alternative investment and for private equity. Those asset classes are what we tag as high risk, in the sense that they're high risk because a little event or any small thing can really just change the outcome of the market. So if let's say something happens to take for instance, okay, something happened this year. There was which event should I use? Or the court case against Fidelity, right? So there was a court case against Fidelity, something about um they went to court and then there was a disagreement between Fidelity and an investor. I can't remember the full story, but he made the news and then a lot of investors and apparently Fidelity had to pay of amount a large amount to the investor or to the complaining party, right? And investors took their calculators and were like, they were punching numbers and they realized that if Fidelity should pay this amount. That means their whole cash flow is gone. So it saw a lot of dumping of Fidelity during that period. The stock was going down. And that's why we say, stock or the stock market is very volatile and it is high risk. A little news can change the entire market, both positive and negative. And that's the same with alternative investments like commodities like crude oil. So, like I said, the whole tariff issue in the US, the war conflict in the Middle East, all those things are driving the direction of crude oil prices and it's trending, downwards it's trending downwards at the moment. So little things like that. If you're investing in all this type of asset classes, just make sure you hold your hat very well and you don't get high blood pressure and you are adequately prepared to face the risks that comes. But the on the bright side, they usually give higher returns, right? So the higher the risk, you always get higher returns on those type of investment. Now for the fixed income market, bonds, treasury bills, because most times they are backed by the government, and then it's very rare for the government to not, repay back their debt. We classify those ones as lower risk, and they give, moderate returns. They give moderate returns on that. So depending on the yield and the interest rate environment, at that point in time. And then for investment like real estate, risk there is moderate because I don't know, some money issues might arise in the course of your investment, but the risk there is moderate and then it gives you, stable returns as well. All right, so we'll focus more on diversification. The diversification, like I said, is basically spreading, not putting all your eggs in one basket, spreading your investments across various asset classes. And we saw this play out particularly in the 2008 financial crisis and the COVID-19, market shock. So a lot of portfolio exposure to a mixture of equities, bonds, alternative assets were able to, weather the storm during those period of economic volatility and shocks, and they could, get better returns during that period. So for you to diversify, various factors that you should consider. For one, the asset classes. So what asset classes do you want to be exposed to? If you're a conservative investor, you don't like risk, how much percentage of low risk assets should you have exposure to? That sort of thing is what you should be thinking about. Then geographies, do you want to combine domestic markets with global markets? Do you properly understand what's happening in the global market for you to, have an exposure there? The sectors, what type of sectors do you want exposure to? And all these decisions should be made, according to your goals and to the type of risk appetite that you have. So if you want short term, if you just want a short term investment, or if you have long term goals, then there are certain types of investment that you should position yourself into. This just shows a minute of what type of investment or what each investor's invest or portfolio would look like. So for a conservative investor who is risk adverse, doesn't like risk, you see a little bit of his investment in asset classes like in equities and alternative investments. And you see a large part of investment in the fixed income. Maybe this 70% is even too small for a conservative investor, right? So you see these type of investors relying or dwelling in the fixed income market. Therefore, balanced investors, they would like to share their portfolio between the equities and fixed income assets, so between the high risk and low risk investments. And then for aggressive investors, they love the equities market, they love alternative investments as well, as they give them higher returns and they are indifferent as to whether they make losses or not. All right, so just before I speak to this slide, maybe you could just type in the chat box what type of investor you think you are. So let's just have that in the chat box. So based off what we've spoken about today, what type of investor do you think you are? All right. So while that's going on, what kind of employee of ARM will I be if I don't advertise our products? All right. for young Nigerians like us, there are a couple of investment options that we have for you at ARM. There's the aggressive growth fund. You can just enter with as little amount as you have, with as little as 5,000 naira or 1,000 naira. You can get into our money market fund, and risk profile there is very low. There's also the aggressive growth fund for aggressive investors that we have on the call. You could get into that with as little as 50,000 naira, and you get optimal return on that as well. So we also have the Discovery Balance Fund, the Halal Balance Fund, which is more Sharia oriented for investors who are for Islamic investors who want to abide with the who are for ethical investors basically. So there's the Halal Balance Fund. You can get into that as little as 10,000 naira. There's the AM Short Term Bond Fund for short term bonds. Risk profile is medium. Can get into there with as little as 10,000 naira. Then there is the Euro Bond Fund. Minimum investment there is 1,000 naira. So if you want to invest in dollars, you want to hedge against the valuation currency risk, you can get into that space. And you can do all of this via our app. Is the One app. And there's also, we're into real estate as well. We have the MREF Mortgage Fund, which just the interest rate on that is 10% and is rated AAA by Augusto and Co. All right. So, how do you optimize returns in a risky environment? That is the big question for today. So, in an environment like Nigeria, where inflation is somewhat on a high level, our exchange rate is really asking for help. How do you, as an investor or as an aspiring investor, optimize your returns? Well, first of all, you can engage in active investing. Active investing is basically watching over your is basically watching over your investment. So you pick the stocks, you make your own research first of all. You look at financial statements, look at how the company is performing, has performed over time, what's their revenue growth like, what's their net profit like. If it's a company that is invested that deals in commodities, like maybe in the oil and gas space or the agriculture sector, like Presco and Okomo Oil, what's the outlook for crude palm oil prices, what's the outlook for crude oil prices, that sort of thing. You make your own research and impact how do these prices impact the stock that I'm looking at. If you're looking into the banking sector, the current regulatory environment, how does that impact this bank or this Zenith Bank or GTCO that I'm looking at. So that sort of thing, that is active investing. So you are basically handpicking your stocks by yourself. You are buying you're buying the stocks yourself, and then you basically investing by yourself. So that's active investing, but it needs a whole lot of research, a whole lot of knowledge, and real time data. And if you have access to that, great. Why not? But if you don't have access to that, then you can switch to passive investing. The passive investing includes you can invest in ETFs, mutual funds. Those ones, offer is the asset manager basically that would control the stocks within those baskets, the basket of asset classes that they are investing in, right? So over time they get returns, and then based on the amount you put in the investment you get your profit or you get your returns on that. So that is passive investing. And then there's also compound interest, and compound interest is basically using your earnings or your returns to generate more earnings. So if you start with, let's say, 10,000 naira in a fund that is returning maybe 12%, right? In 10 years you can basically double that your money without adding more, just basically compounding interest. So the earlier you start investing, the better for you and the bigger it grows. And then finally we have portfolio rebalancing, and like I said, markets change all the time, so you have to tweak your investment. So if stocks if stocks boom or if stocks gain, you might want to, sell some, you might want to sell some of it to get back to your, to your to your desired weighting for equities in your portfolio, and then maybe divert some into funds. So overall, all this is just to say, it's very easy for you to start investing. There's going to be a lot of ups and downs, right? There's going to be a lot of ups and downs, and it's very fun, to be honest, gathering knowledge and making your own research. But of course, like I said, if you're not able to do your own research by yourself, then you can do passive investing and just invest in a basket of assets that already provided for you by your asset manager. All right, thank you everyone. I hope we've learned something today.
Come on, a round of applause for the lady. She did us wonderful justice in looking at all this topic. A round of applause for yourself for being so long on this call. We have taken your time. Apologies, please, but these are important issues that cannot be easily glossed over. So I thank every one of you. Kalista, beautiful job for exposing us to more insight. As for me, I will speak for myself. I'm an aggressive person, probably because my adrenaline is high. So I tend to be very optimistic, very hopeful, very aggressive. But that's not a financial advice, please. Don't be like me. You don't know what I go through in the night or what I go through later on. But very well. Thank you very much, Kalista. Thank you so much for the insights you have provided. But before we wrap up, one important part, and this part is important because I'm a lawyer. That's why it's very important. And my good friend had to come on this call to make sure that we get some things right. Now, please, ladies and gentlemen, a round of applause for my good friend, Ubong Ene. Ubong Ene is a purpose-driven lawyer specializing in the legal areas of corporate, commercial, energy, finance, and capital market at Perstone and Grace. He's working in one of the big law firms. So if you see him, bill him. Ubong has extensive experience as a counsel, helping businesses with their capital raising effort through both equities like shares, debt instruments like debentures, and commercial papers. He also advises on complex structured finance transactions, including lending and debt recovery. Beyond finance, UB is skilled in advising major energy and oil companies on significant project finance transactions. He also provides general corporate advisory and regulatory compliance services. So UB will be speaking to the legal side of investing. What are your rights? What are the risks you must take note of? And what are your responsibilities in the capital market? You may not know why this is important, but trust me, 10 years down the line, you will know why. UB, before you take us on the topic, do me a favor. You specialize in the energy and oil markets. If you are, and I don't want you to cut corners for me, you're a lawyer, give it to me hot. You know what's happening in the energy market. Give me two stocks in the energy market I should take risk with? Two stocks. I know I'm looking for your trouble, but can you try? And then you can take over. Thank you.
Well, maybe I should just speak to one. I mean, I've personally tried my hands on what Chevron is doing, and I, it's a little bit risky because I know the time I tried it went down a little and went up again. The analysts that speak, I think they will be the ability analysis part of all of this.
So I should take a risk and join you in trying Chevron, sir.
Well, you
Is that
said you have
financial
a
advice?
very expanded mind, so your risk abilities are top notch.
It's all good. Thank you very much. Over to you. Go on, sir.
Okay, thank you very much. Please just help me with the slides. So good evening, everyone. I mean, I'm not going to stay very long because I know we've really had patience to stay here for a while. So I'm just going to speak to the legal part of it. And it's just about the right, maybe the risk you may likely encounter, which I have I've been able to identify just one of it, which is really troubling based on how we want today's session to be, and that is the issue of unclaimed dividend. And then eventually we just advise a little bit on how you should be responsible for some of the investment that you've decided to put your hands into. So just take us to the next slides. Every single time you speak to investing in all of these companies, I think the first thing that comes to your mind is, am I investing in a market that is out there, more like the public market, where you have to, of course, approach the exchanges, different kinds, or am I investing in just a private equity part of it, or what I can call private companies? Am I just meeting up with one of my friends to just put in money? Let's do business together. Which of them am I doing? So whichever of it will definitely determine where you are going to. I know that we are very much speaking to what is happening in the public market there, more like the exchanges. I know that is what we are really talking about. But I also felt it's important to give a little bit of enlightenment on both when you are trying to make an investment in the public market or possibly make an investment in the private market. Some people don't really understand that there are certain rights that you are entitled to every single time you put in your money, every single time you try to invest in one of these things. There are certain rights you are entitled to. And I've captioned it in a few points. The first part of it is what I call the governance and participation rights. Internationally, in short, the ESG principles that we have now, I mean, if you've heard about ESG, environmental, social, and governance principles, have really, I mean, it has been big on the fact that, especially in the public markets, and the reason why the ESG is very much strict with some things, the reason why the Securities and Exchange Commission, whichever part of it you are playing, you will be very much scrutinized. The reason is because investors are supposed to be protected. And one of the reasons why we even have the recent amendments to the ISA is also because there was the need to protect investors a lot. We had a market where there was protection, but maybe a few loopholes, and that was the reason why we had the ISA that came on board, I mean, recently, the amendment. So as an investor, there is this part of it that, I mean, some people don't know, because check, for instance, you're investing in big companies like Access Holding, for instance, and you are basically, you didn't put so much money. So you're a little bit thinking like, what right do I even have? It's just 100,000 I put there, right? But you are actually entitled to certain rights. I may even want to put it as a question. Those companies that you have shares, maybe the ones that you know in Nigeria, when was the last time you attended their meeting? You don't really know what happens there. The more reason why you don't know what happens to your securities. Have you really been paying attention to when dividends are declared? All of these things are your right. So on the governance part, you can participate in all of this. It's your right. You are expected to do it, to vote, attend meeting, vote, demand polls, of course, help in passing resolutions and for major things that are happening in the company. Just to make you understand that you've not been shut out. You are actually entitled to this right. But I think we take things very lightly on this part of the world. Yes, so there is also, I mean, I've even mentioned it a little bit, the economic and proprietary rights that you have. I mentioned your dividends. I think we pay more attention to that one because we want to gain our money. Yes, you are entitled to that. And there is something called preemptive rights. This one is more tilted to private companies. And let me also speak to it. Most of the time, you may have entered into a kind of business, maybe possibly with family members, friends, and you guys are just pulling funds to do a little business. And there is a way that the structure of the company is being placed, and you guys started like five, and all of a sudden someone is trying to bring in another person. You may not want that to happen because it may possibly water down your interest in the company, right? The ownership structure might be a little bit affected. Most of the times you find out that instead of going through that route, there is always another way out. Contributions to, or possibly obtain additional shares based on the proportion of their shareholding. That can happen. But in private company situation, you find out that we have this very cap that the law has really put in place to protect people that are in those kind of companies. It's called the preemptive rights, some people call it the right of first refusal, and both of us are there, and I want to sell my shares. It is usually required that I should offer it first to Peter to ask him, are you going to get these shares? The reason why that is happening is because you may not want to water down the structure, you may not want to alter what was initially in place. While we have these in private companies, we may not have this. The public company situation might be what you see them call the right issues, because they don't want to alter their structures. So recently, the recapitalization structure of the central bank, I mean, the demands that central bank made recently on banks, asking them to recapitalize, raise additional capital. International commercial bank should do 500 million and all of that. Most of the banks did rights issue. I know you must have heard that most of the banks did rights issue. And I also know that some of us here have shares in those banks. So the question is, did you exercise that right? When they mentioned that this bank is floating, they're doing a right issue. What did you do as an initial shareholder of that bank? What right issue means is that the bank is issuing additional shares to its existing shareholders, but in the proportion of their initial shareholding. Practically, if I was a shareholder in, I like using Access Bank, for instance, I was a shareholder in Access and I had 20 million shares, and then another person is there, 10 million shares. And then if Access Bank should want to do a rights issue, the proportion of my shareholding, if it should entitle me to an additional 10 million shares, the proportion of the person that had 5, the person will be entitled to an additional 5. It could be less, it could be based on the proportion of their shareholding. Are you aware that especially minority shareholders don't normally exercise their right issue whenever this happens? Yes, we allow those rights to slide. When it slides like that, it affects your position in the company, shifts your position because another person is possibly exercising that right. It has lapsed. It can be shifted to some other person. And what that simply means is that your position, you may not be entitled to the same percentage that you were if they should want to do that. So it's a right you can actually. And then there is also another part to it where you are also entitled to information, you are entitled to make some inspections. I have so many questions to put forward. When was the last time you looked at the minutes of maybe the board meeting of the company you have shares? When was the last time you took out time to look at their financials, their records? I mean, the last person that spoke about when you can maybe possibly make an investment by yourself. Of course, you need to be abreasted with so many information. When was the last time you look at these things? Have you really taken time to even go to the maybe this Corporate Affairs Commission website to even have an understanding of the portfolios of who are people with significant control? What kind of significant control do they really have? Check, for instance, someone can be empowered to appoint people to the board and you don't even know, but you have shares in that company. Have you really checked who these guys are before you even make your investment? Because when companies are launching out, there is something called investors readiness, there is something called investment readiness and preparedness. These companies will always have to put their house in order. Now they are putting their house in order because they want you to come and invest. And for you that is going there, you are basically going to be looking out for all of these things. Information is so key to you, and it's your right. Are you aware that if you have shares in the company as a shareholder, you can apply and request minutes of each of their meetings? They will give you. You can read through them. You can ask for their records. Of course, you are entitled to them. These are things we don't actually pay attention to. There are no hard and fast rule, because especially those companies that are out there, the public companies, these guys are expected to do a lot of disclosures. They don't have to hide anything because, of course, they are inviting the general public. So it's also your right. And then this is the part that I call protection and of this. I mean, how you can protect them. You may also, most people are worried that you are just a minority, and because you're a minority you can't really say much. But is that really true? No, it is not. So the more reason why you have to get close. And you see, some of these companies, the market thrives on information, just like the last speaker mentioned. They hide a lot of information, And that is why you need to get close, because anything that happens that goes out there is going to affect a lot of things. So you won't really hear a lot about them, but a lot is happening. And that is why you are blessed to be a shareholder. You are blessed to be an investor in this company. You can get close. There are times things are done and you can actually demand some remedy, because obviously you, as a minority, you may have been oppressed. We even have times when people on the structure, like the alter egos, what the hands and the legs of the company, like the directors, they may actually act in a way that you know for a fact that these guys are doing things that are affecting these companies adversely. Yes, maybe you've been attending the meetings, you hear what happens. I hope you know that people that are minority shareholders, or even somebody, any shareholder in the company, if you see something that is going to affect the company and in somehow, somewhere may affect you eventually, you can bring a derivative action. Yes, we're in Nigeria, we don't like going to court, but when you have pool of investment that is so much, you may want to do that. We've had practical situations of having MDs of top companies mismanage at the top level, and you see the shareholders shouting, regulators trying to come in. I mean, in a more structured society, that's when you be hearing those cases. I know maybe some of us may have read about some corporate scandal like Enron and so on in other places, but this is just an opportunity to tell you that you are actually entitled to. I was speaking to the fact that directors are also in a position where they are given so much information, and because they have so much information, of course, they can deal with the company the way they like. So the more reason why they are very restricted. These guys are very restricted. So they owe you a lot of responsibilities. Everything they will have to do, they have to act on the interest of the company. And you can actually demand this from them. So because of course they are the hands, they are the legs of the company. So and then there's another thing that the law has done and has put investors in a very good position. As we speak, before now we used to have a situation where you are just a shareholder, but you don't have anything, you don't have a say in the company. That was a time when the old karma used to karma, that's Companies and Allied Matters Act, used to recognize situations where somebody can actually be a shareholder in the company but doesn't have a voting right. Is that not funny? That's actually happen anymore. So shareholders are now, you can't have non-voting shares. Every share must entitle the holder to a right to vote. So you see, there is protection there. There is protection for investors. You have rights. You are entitled to a lot of things. But I think the where it is really lagging behind is the fact that most shareholders don't actually advance to, of course, enforce all of this. I'm going to speak to this in a very clear way. I know recently some companies decided to make mention investors should not come back to claim their dividends if it has passed 12 years. If I should ask people to react to that, I think we will have a lot of comments on the issue of, can I really claim my dividend in this company if it has passed this time, if it has passed the other time? So there's something that our law did. So before now, let me start from what used to be the case. The whole Kama, because Kama was amended sometimes in 2020, and we also have a Finance Act that followed that, a few amendments and all. So what we used to have in the old law was basically a cap that was set on dividends of companies, especially public companies, on when you can recover them. And the position as at that time, I mean, if you still have your old camera, you may want to go and read what was in 382. It was a very unusual position that, I mean, when it gets to a period of 12 years, if you didn't go back to claim your dividends and it's been there, specifically those public companies' dividends, after a period of 12 years, you cannot claim it again. Yes, that used to, and it was basically the understanding that those shares were going to be full back into the company and was going to be distributed to the existing shareholders of the company as part of the profit of the company. Yes, that was the position. And I don't know, that was a little bit weird. People were worried, a lot of things happened, and that called for a little bit of attention. And then Kama was amended, that position wasn't there anymore. But the Finance Act was now, amendment of the Finance Act actually came into existence. And there was a little bit proviso that has been provided now in the Finance Act. So what we now have in the Finance Act is, so I'm going to structure it. Let me start from the private companies. So you see, for private companies, most of the things that happen in companies like that is usually regulated in the article of association, and they set down modalities on how to deal with shares and everything. And you see, issues like this may not really be practical concern in private companies because, of course, it's not no public product out there in the exchanges and all. It's a company that you can walk in, your friends and everybody, you're fine. You don't have issues. So private companies may not be a concern here. But for public companies, that position that after 12 years, you cannot claim your dividend is not actually the position. The position has now been properly captured in what you find in the Finance Act. I was going through the internet the other time and I was seeing how SEC came out to warn some companies to stop telling people not to come for their unclaimed dividends after 12 years because it has been statute barred. So what the position is now is, first, after 6 years, there's a fund that your money is going to be transferred to. And that fund, that is what we call the UFTF. That fund is basically established by the government. And what the government does is basically keeping that fund there for you. It's going to yield interest, it's going to yield returns. They're keeping it for you. Please go back to the slides on the table. So that fund there is going to yield interest, and everything that is accruable is basically kept there for you. But it is worthy of note that it is not statute barred after 12 years. It doesn't matter. It's just the position is just that for public company, they will keep it there after 6 years, and the federal government through the DMO is going to supervise it. That's the debt management office, and then the interest and everything will be there managed by the federal government. You can actually go back and claim your money. You can go back and claim your money. So what the think I just permit me to just give you very clear how it says. So if you read Finance Act, the amendment in 2020, Section 60 of it, it made mention of the fact that dividends are special debts that are due and recoverable to shareholders within 12 years and only actionable when declared. And a dividend that are unclaimed after 12 years should be included in the profit that should be distributed to other shareholders of the company. But listen to this part that is sparking the more. The sub 3 now mentioned the fact that notwithstanding what has been captured in 1 and 2, right? Dividends of public limited liability company, that's companies that are quoted on the exchanges. So if it remain unclaimed for 6 years or more from the date of declaring it, will be immediately transferred to that fund that I mentioned to you. And sub 4 of that very section now makes it clearer that such unclaimed dividends, when transferred to that fund, shall be special debt and it's owed by the federal government to the shareholders. Can you hear that? And shall be available to be claimed by the shareholders at any time pursuant to the aforementioned perpetual trust. The federal government, by virtue of this fund, has created what can be tagged as a perpetual trust. Perpetual trust simply means at every time the government acting through the DMO is a perpetual trustee and is going to act in your interest as the beneficiary. So you can actually claim it. But I also think people don't know how to go about it. If you had obtained shares in a company that is quoted, you may want to practicalize this now. For example, just type unclaimed dividend portal. You will see the portal pop up on your screen. SEC manages the portal. And if you click there and you put the name of the person or the shareholder of that shares, it will take you there. What it will open to you in addition to that is that it's going to point you to who the registrar is that is basically handling your securities and the dividend that came with it, right? If you get to that point and you've identified the registrar, it's simple for you to just go to that registrar office. And I also think this is what people don't know. Once you know your registrar, they are in the country. All those companies have them. We have the offices there in, Lagos and other places. When you see that you have dividends, your shares, your securities are here, dividends are here, and you have seen the registrar on that portal, approach the registrar and fill the form. There is a form like that for instant payment, and then you can recover. But I also think the problem that we have is that people also clamor a lot about issues without really taking steps. This is also one of the steps. And I feel, in short, practically, these registrars will guide you better on recovery of this thing. And you know that there's also a penalty that if they don't actually guide or provide what you need to do, they can be punished for not doing it. It's this effort that the government is putting in, the regulators they are putting in, because I think over 200 million unclaimed dividends, like it's a lot of money here. So there are ways about it. So I think this is also an opportunity to clarify the fact that you can actually claim your dividends. The government is handling it in perpetual trust after 6 years. If it's not up to 6 years, you can still go after 6 years. Of course, enter those information on the portal, identify your registrar, and go ahead to recover. So yeah, I think this is the last part for me, and it's more like your responsibility in the market. Active engagement is actually very key. Active engagement is very key, and then your ability to do diligence and also ensure that these guys that are of course running the company as the alter egos are being responsible for what they are doing, like they are very accountable enough. So that's what you have to do. You don't have to just stay on the fence. You don't have to sit on the fence and just think that nothing is happening. There is need to be actively engaged in the whole process so that you can see how the securities that you've invested in can actually get back. You get your appropriate return. I think this is where I will stop. But my words is you have a lot of rights, and you can as well claim your dividends. If you stay active, you can also get a lot from the market. Thank you.
Thank you very much, Yubi. Round of applause to everyone. Yubi, thank you so much for making us realize that we have rights. That's what many people do not know. We have rights. The moment you buy a stock, you buy a share, the moment you have an equity in a company, the moment you own something that is tied to a company, it gives you a lot of rights. But we think that Dangote is untouchable, just like something, or we think whosoever it is, they are not untouchable. Your money is invested in there. And with time, this is just a beginner's guide. You may not know what these things mean, but I know many of us on this call are young. Tomorrow in the future, when you become very more involved and engaged in the capital market, I believe and I hope that you will be an active voice to help people reassert their rights and get the best. A lot has been said. I want to thank everybody that has been on this call from the beginning. I mean, you guys are the real MVP. A round of applause to everyone on the call. I know you have questions. I will just take just 5 persons, just 5 persons, just 5 persons.
Okay, thank you so much to all those speakers that spoke. Thank you. It's been very much enlightening. I want to ask quick questions. The first one is about there's this Nemo app that comes up every time I'm seeing a video on YouTube. Is it like a broker? That Nemo app and Bamboo app, are they brokers? That's question number one. Number two, the second speaker was talking about investing for her children and things like that. So I want to ask a question. If peradventure someone having a stock or a portfolio passes away, can those stocks be transferred to the his or her children? Because I have a case where let's say my late dad's finances were trapped in his OP account because there was nobody that has his password for that particular account. Others, they were password. So I want to ask, if peradventure someone investing passes away, can those stocks be transferred to his or her progenitors?
Thank you very
And
much, Roya.
also,
Quickly, yeah,
are there books you could,
quickly.
are there books you could, yes, are there books, would the slide also be made available for us? Thank you.
So quickly for the slides will be made available for you.
So for Bamboo, it's basically an app where you can just trade both local stocks, Nigerian stocks, and global stocks as well. So they are more like a third party. So they are brokers that they use, and then you just buy the stock on the app, and then it reflects in your portfolio, and then you can trade from there.
So let me add to what Kalista said also. The Bamboo app is regulated by the Securities and Exchange Commission of Nigeria, meaning they are very much operational in Nigeria. So if they do anyhow, you can easily, hold them liable through the Securities and Exchange Commission. You can report them, you can track them down, you can take them to court there because they are fully operational in Nigeria. However, the Nemo app, so Nemo app is like a merger between crypto exchange and trying to get people onboarded to invest in American stock. However, However, it is not regulated by the SEC of America, so you are not covered. Instead, I think the Nemo app is more of a in Dubai, and in Dubai they have flexible laws, right, to cover companies that are mostly tech companies that are trying to avoid the radar of regulatory complexities in countries like America or Europe. So it may be legit, emphasis on me, when you are lucky enough. But if it crashes, there's no backspace, or rather, there's no safety net for you to hold them liable. You can't run through Nigerian SEC because the Nigerian SEC did not recognize them. So our speakers today have emphasized that anyone you are going to be trading with, asset managers, brokers, or whatever investment company, they must have SEC license, SEC certification, SEC approval, and you can always ask them to provide it. Yes, it's your right. Like our two speakers, that is Kalista and Tolulokpe, they said Kalista says she's from ARM, Tolulokpe says she's from Coronation. You can ask them, please, are you SEC licensed by Nigeria? And you have the right to ask them, and they must provide you the answers. So let's try it. Tolulokpe, is Coronation regulated by SEC, or is all vibes and inshallah?
Yes, it is regulated by SEC. Definitely.
Thank you. And Kalista, can you die on the fact that IRM is SEC compliant, or we should call EFCC? Don't
Yes,
mind me,
so
I'm
we're
being
still
extreme.
compliant. Yes, yeah.
Thank you. Okay, finally, UB, they spoke on the part of unclaimed dividend. Sorry, I have to. UB, are you there on the call?
Yeah,
Royal spoke on the part. Yeah.
yeah, you spoke about,
So,
I think the question
and then
was,
OPay, two-sided. So you are the lawyer. This is where your money comes in. What does he do? Quickly, please.
okay, you helped me raise that question on the OP part again, but I know I heard him when he mentioned that possibly if someone dies and then he still has shares, how do they go about it? So the first thing you need
Yeah.
to know is that there is something called transmission of shares. So when someone dies, it doesn't mean that the shares has gone. No. Usually the person may have died and has, if the person has will, there's usually the process of having to obtain the probate, and then of course some people will their shares to their children or some other person, depending. If you take that very instrument to the company and present it to them, that is perfect, and they will definitely have to transfer the securities, and then based on the what is stated in the probate, of course they will put the name of whoever is listed there as the new shareholder of the company, and the person will now step in and exercise every right of the actual shareholder. If the person dies without the shares, there is the issue of later of administration. Whatever is the case, there is always an opportunity to present a document to the company for the company to be able to have someone step into the shoes of the person that died. But the thing is, if you don't do this thing, most of the time the company may even if they are aware of it, sometimes they usually send notice. And there are times also where you have people have conflicting claims about shares like that. And some persons will have to lodge with the company something called a notice of interest, just to tell the company that there is an issue with these shares, so that nobody will just wake up one day and claim it or will it to mean turn it to himself. Things around that line. But the end of it is that if nothing is actually done, usually there is something called a suspense account. Companies usually go back every dividend that is accruable to the shares because nobody has come. Those dividends are kept in the suspense account. The day somebody comes eventually for it, they will definitely have the proper person claim those shares. That is the thing.
So that also ties to the question on OPay, Mr. Roya. So your dad died, let's say he dies with a will, that is testate. If he dies without a will, that's intestate, right? And so the best thing to do in this case, whatever asset your father has, and they are not allowing you to access it or you can't access it, and most jolly, we know our fathers do not write wills. The best thing to do is to get a letter of administration. So get a good lawyer friend, talk to that lawyer friend, so that they can process a letter of administration for you and your family. And then you can use that letter of administration to go to any bank, to go to any broker, to go to any asset manager, to go to anybody holding your father's assets and say, I have received this letter of administration from the probate registry. I've been enabled by the courts because I've gotten a letter of administration so that you can transfer my father's shares, my father's asset, whatever it is, to me or allow me access. Now we go to the next question.
Please, I just wanted to shed a bit light on REITs, real estate investment trusts, within Nigeria, and then the foreign denominated REITs. Then I don't know, how can one get more light as per financial investment in Nigeria? Like, how can you sign up for periodicals? Like, I don't know, most of these financial institutions, ARM, Coronation Assets, is there a way you can get maybe a weekly periodical, a monthly periodical, financial advisory, basically, so that, the people that lay people that don't have, deep experience in these things, I believe there's so much cash around. People are not investing because they don't have much knowledge. So can there be like, a way of making people financially literate about investments in Nigeria? Maybe weekly you can get some kind of communication or something
Thank
like
you,
that.
Funola. Blossom. Oh, you are muted the other time. So we'll come back to you, Blossom. So please, next time, just help us try to unmute so that we can hear you. Is that okay? Thank you. So, Tolulope, you spoke on REITs. Can you expand on it? And then, Kalista, can you help us expand on how to get advisory notifications or newsletters? So, Tolulope, help us with real estate investment trusts. Thank you.
First, I wanted to address the previous question. So another way to know if a company is SEC regulated, you go to their website, SEC website, sec.gov.ng, and just search for the company. If you do not find the company there, then the company doesn't exist. The company is not SEC regulated. Now, let's talk about rates, which is definitely a pool of funds to invest to buy a land or a building. Currently, Coronation doesn't offer that for now, but something that we're looking forward to in the future. But you could check. I think I'll come with a list. Probably I'll just send a list on chat or something later of company that does real estate investment trust and the list basically. So you know that okay, like the list amount to start with is. Yes,
Thank you. Kalita, can you expand on that? And then also perhaps ARM offers or what you know about it also, and then the newsletter.
Oh, for REITs, currently our real estate is not listed on the NGX or anything. It's not trading. But what we do is just a mortgage scheme. So if you want to buy a house, we can give you, payments for that with a 10% interest. So it's called MRIP. So it's an ARM partnership with the Ministry of Finance, the government's Ministry of Finance. So the product is called MRIP. So it's just a real estate mortgage scheme. So it's not essentially a REIT. It's not listed on
Very well.
stock traders. And then for investment advice, for that, there's going to be a lot of subscription to all these to research houses like ARM, Coronation. We can subscribe to mailing lists for most of these houses. Most times, research analysts send out investment advice, stock recommendations, summary of everything that happened within a week. You can just read through so you can get insight on what's happening in the global and domestic market. Another way is you could just subscribe to all these newspapers, Nairametrics, the business side of Punch, and for global news, you can look at Reuters or Bloomberg, but I think those ones are paid subscription. But yeah, that's a way. That aside from actually going to any of asset managers and talking to the investment advisors there. So those would be the ways for getting investment advice.
Very well. Thank you. Tolu, you wanted to say something?
Yes. So I've been
Okay.
hearing the buzz of UPDC, including their UPDC rights. Though I've not
Okay.
checked their financial, but you should be able to find UPDC. Is this definitely sector related? It's on NGX, but I'm
Yeah.
not sure you can. But you could just probably check out their websites to learn more about it.
Thank you for that. Okay. That said, Blossom, can we hear you quickly?
So I think Kalista talked about something that like opening an account or investing. Like you can start with as low as 10,000, 5,000. So I wanted to know more about that, and also this unclaimed dividends. So I checked online. I just googled it online and put my name, and I saw something with Fidelity Bank, and I can't remember when that happened. But
Okay, Kalista, can you help us?
All right, so for that, I was just trying to list out some of the products that ARM offers. So for products like the ARM Money Market Fund, so if you just download the ARM app, you can register and then fund your account, fund and invest your money in the money market fund. It's as low as 1,000 naira. So there are other investment products like the ARM Aggressive Growth Fund. So that fund invests majorly in equities, right? Because it's aggressive. So it's as low as 50,000 naira. You can invest in that fund on the ARM1 app. So there are a couple of other products that we offer. With as low as 10,000 naira, you can get into the ARM short-term bond fund. So things like that are ways you can. So just to say that you don't have to have all the money you want to start investing, right? So it's any amount that you have, 1,000 naira, 5,000 naira, you can get into any investment product that we offer.
Thank you. Mohammed, you are the Gen Z savvy person. What are, apart from ARM1, what other tools, I know you know those tools. What other tools would you expose us to that you think we should check out?
Okay, we have ARM Coronation, Stambik, Cardywise. There are actually a lot. I think I listed some of them at the end of the slide, like at
Okay.
the very end. So they are there. So for the list of licensed operators, that's the link there. You also once you click on it, it takes you to the module, and then you search the name of the either the broker or the asset manager, and then it tells you what they are registered for. So some of these firms have multiple how do I say, they have multiple services. So some like ARM, I know they have securities, they also have the fund, that's the asset management side. Bamboo also does the brokerage, and Carrywares also. So a lot of, I think this list is actually a good start. There are much more, but these are like the popular ones. no names out there.
Okay, thank you, Mohammed. Again, UB, they're mentioning this unclaimed dividend. Blossom is saying that she found her name and she never knew whether she bought a share in Fidelity. So, should she transfer the money to me, or what should she do about it?
Okay, I think if you can't remember, then possibly maybe someone is bearing your name. That is also possible because people may have identical names, no doubt.
Yeah.
So yeah, it's possible. So, but you can also check the registrar there to maybe actually confirm. But if you don't even have anything to do with it, you don't, then possibly it's somebody's name and not you.
Mm,
Yeah,
okay.
that's what. Yeah.
But UB, can the power of attorney work? Let's have Blossom give me a power of attorney. Let me check on it for her. And then if there's something there, I can take like 80% and give her 20%.
Power of attorney can actually do anything.
I'm sorry. I'm just being devious. Okay, thank you. Now let's now have Chukwebuka and then Treasure. But before that, Tolu Lokwe, you have something to say. Your hand is raised up.
Yes, this is. I just
Thank
want to
you.
emphasize on places you could go to start.
Okay.
Apps you could go to start. I know banks and fintech integrating it into their app. I know OPay and OPay have mutual funds on it, so you could probably just go around and check for investing. The fintech you probably see it. I'm sure of Access More. You can buy stocks and funds on Access More. So that's the Access Bank app. Just go to investing, you will find it. Correlation is there. That's why I'm very sure of that. The correlation is there. Correlation money market fund, and you could probably just to make it easier. If you don't want to have to start with doing another app, you could just use check your bank app. In the next by the end of the year, I feel most bank apps will have investing included in them.
Very well. Thank you very much for that. So we have two more persons, and then we'll call it a wrap. Chukwebuka, over to you. Quickly, please. Let's have you.
Okay, thank you very much. Thank you very much. Good evening, everyone. Let me just go straight. Please, after this, how do I get in touch with Mohammed? And again, there was a time I bought shares in had an advertisement on the radio over the radio. So I bought shares with MTN. I think I can remember the gym I used, but I can't. I lost my phone then, the one I used to buy it. I can't have access to it because I've tried having access to several times. I can't even remember the app I used there, but I know that I bought shares. So in that situation, what you want to do, because by now I hopefully it might have grown because it's I think last 2 years or the last 3 years or 4 years, but I can't remember. But the only thing
Chukwebuka,
I can remember is the Gmail.
Chukwebuka,
Yes,
we'll do something on this call. I will
yes.
help you, but everybody will be my witness. We will split it if I help you. We'll help you. I will help you. Do you agree that I will help you? But you will give me a percentage, like 80%. And I'm very serious on that 80%. Do you agree?
The
Say
thing,
yes right
the
now,
thing
and
is
we
that
have a
I can't.
witness. Don't worry.
Wait,
It's not about, we should not worry. That will help you. Just say it so that we have a cloud of witness right now. Say
okay,
yes.
the thing is that the thing is that is
Brother, you're stingy. Say yes. Just say
I think
yes.
there's a small amount of there. You know,
Okay, we
Okay.
can just think about it. Let him go and think about it.
So quickly, Mohammed, someone would love to have your contact. So if you want to get the contact of the speakers, I would love that you pass through me. So I'll call my numbers for you now. I'm very so that I can link you up with the speakers. I want to call my numbers right now for those on the call who don't have my numbers. It's okay. You're ready? You can write it down. So I link you up with the speakers so that if they prefer to speak with you through mail, I'll give you their mail address. If they're open to you to speak to them through LinkedIn, I'll send you their LinkedIn contact. And if they say, okay, go ahead. So I can filter that. So let me give you my numbers. For those who want to connect with me or the speakers, here's my number, 090 For the last time, 090 91203258. Thank you very much. Now, which of our speaker can help us with getting Chukwe to his shares in MTN that he does not know how he signed up, how he owns whatever it is he owns there? Can any of our speaker just take it at random, please, quickly?
Okay, so let me just give it a shot. So,
Thank you.
um, two things first, right? Go to the SEC website, type your name. If you can see it with the shares, fantastic. If you can't, then you have to check a receipt of payment, who you paid to, how the funding was made. Then you take it from there. And for the Gmail that you said, if there should be like an evidence of payment. That is, you just have to like find a trade, right, to pull from. That's the real thing. And you could also check MTN. They usually have on their website, check investors. You would see unclaimed dividend. So also check there for your name. So if you have a stock that you've not claimed dividend for, you can always check the website of the company. They are mandated by the law to release unclaimed list of people that have not claimed their dividend. So you always check investor relationship. You just see something about investors, right? So then you find whenever they're releasing their full year reports, they usually have it when they're paying dividend around those times. So you just have to find the trade and then pull it from there. I hope that helps.
I'm thinking of also going to an empty office. I don't know if they can show up.
Simple. So these are
Okay.
how you can
I
do.
think
You can.
okay,
Someone
let me
wanted to
add,
say something. Let's hear you. Thank you.
yeah, I you could also find the registrar managing MTN. So currently, I think
True.
the registrar managing MTN is Coronation Registrars. So if you check, you can either reach out to them or download their app, Shelter Live. So once you check it on Shelter Life, you see your stocks and basically just run everything about the MTN stocks you have. Then you can reach out to registrars to process your own dividends and everything. But right now,
Thank you.
I think yes, MTN is under Coronation Registrars. So instead of having to go to the office, which they might not have an idea, rather go to the registrars managing the company.
There is this guy I follow on Instagram. So I've been seeing about buying stocks on shares on Apple and all the rest. So how do one buy all those shares, Apple and the Samsungs, so that you are advising him instead of you to be using iPhone 17, you don't have a share, you don't have a stock, and any phone that come out so that, for example, you want to have a share and you need to and
Yeah.
all the rest. So,
Mohammed,
so
can you help with that?
Okay. So two things. First, make sure you do your due diligence because dollar is expensive. Let's not. That's one. Secondly, for the apps, you could use Bamboo. You could use um, there's this tracker which has turned to high. I think Heiser. Yes. So tracker used to be high tracker, but it's now Heiser. So those are the two that you could use.
Trove too, I
Um,
think.
Trove, yes, Trove. You could also use Trove too. So, but again, because somebody says you should invest, does not mean you should invest. Please do your due diligence.
Due diligence. Yeah. And since these are American stocks, right? That means you'll be going through third parties, right? So most of the apps you'll be going through, they would have imposed a lot of costs. For every $1, they're probably sharing 80 cents of that dollar, and the only thing you are left with is 20 cents on it. So perhaps you will need to jackpot so that you can open a proper system in US. You have an account, you have a broker or a brokerage or a registrar, and then you can run that process. But if you want to do it from Nigeria, Bamboo is your good best, one of your best shots. Trove app is also good. But then most of the apps we have are domiciled in Nigeria and they are focused on the Nigerian capital market. Finally, let's have Treasure ask. Treasure, are you a he or a her? You know, we never know the
Uh,
gender that bear names like Destiny, Blessing, and the rest. Help us know who you are.
okay. Good evening, everyone.
Oh, she's a lady. Good
Uh,
evening, mademoiselle.
okay, I would like to say a big thank you to our speakers and our hosts for your time and for sharing your knowledge. I have two questions. The first one is the second to the last speaker, that's Ma'am Kalista. She was emphasizing the importance of doing your personal research. So, as a beginner, I want to know what are the basic things that you need to know before you invest in a company, like because like she was really emphasizing on the research part of it. So, what should I know about a company before I can trust them enough to invest in them? And then the second question is, what are the platforms that I can subscribe to, to get information? I'm asking based on what the second speaker said about the Calabar Road. She was um giving an example about treasury bills, and then she cited the Calabar Road. So I'm now wondering, how does she get those information, and how can I get them? What are the platforms that I can subscribe to be up to date? That's These are my questions.
Okay, so Kalista, you will take the part on, what should she know about, the company before investing, right? And then I'll take the part on where you can get information. So Treasure, we are swimming in an age of information. So here are four stats for general information. Number one, reduce your following of Davido and Lai Wasabi, and increase your following of Nairametrics. Yeah, so Nairametrics.
He
So
doesn't
look,
follow any of those people. He doesn't.
don't mind me. I'm just joking. So Nairametrics is a good start. Basic, simple. Look for Nairametrics. That's one. Look for Business Daily. Business Daily. That's two. Look for Pro Share. Pro Share. Pro Share.
So I
That's
didn't
three.
get that part. The pro.
Pro. PROSHARE. Pro
Okay, thank
Share.
you.
Yeah. Now, so these are just basic. They can give you general overview of how the economy works. They'll talk about left, right, center. They are for everyone and for no one. Then, if you now want the industry insights, right? People that will give you analysis, right? Are you there? So, number one,
Yes, sir.
you can start with Augusto. Augusto. Augusto is spelled Agusto. Augusto is they are a rating company. So when they are giving you facts and details about left and right, you better believe them, right? Secondly, this is a shocker. Many of these companies that Tolulokwe represents, such as Coronation, and that our third speaker, Kalista, represents, such as ARM, you have to follow them on Facebook, LinkedIn, and Twitter, because they cannot be publishing every month. It's maybe once in a while something happens and then they make very important publications. But because we live in a world that we are distracted by Burna Boy and 30 billion gang versus Star Boy, we hardly see those information. So you need to be very conscious in following Axamansad. Our first speaker, Mohammed, represent Axamansad. You have to follow them on their page everywhere. Follow them. Follow ARM. Follow Coronation. Follow Bamboo. Follow mention any finance company that follow Cardinal Stones. Follow Meristem. Follow just just follow them, because they know they are managing people's wealth, and therefore they have to prove that they are doing their research and analysis, and that as you are putting your money with them, they are not throwing it into the fire. If you become conscious of following these industries, our algorithm will naturally orientate towards showing us those kind of information. So for me, if you and I don't hide it, if you are my friend on Facebook or on Basic as WhatsApp, you would know that I am endowed in information. And why? Because I realize that my algorithm must give me what will make me stand out in my generation. And it's by finding those little things to drown out the noise of Tunumbu and one tribalist bigot against Igbo people. Those ones, they will never make it in life. And so I will not see their news. But those that are important, how Dangote's refinery is working, follow NGX, that will help you. Now, Kalista, please help us. What should Treasure do before she throws her money into the next big thing?
Okay, for the major one would be looking at their financial statement. I think I mentioned that during the presentation. So you should try to, okay, as a beginner, major things you're looking at their financial statement. So when you, if you take for example MTN, so you Google MTN on your Google search bar, Google MTN annual financial statement, 2020 H1 half year 2025 or 2024 full year, anyone, and then the result comes up, and then what you should be looking at first would be their revenue. So what is their did their revenue increase from 2024 to 2025, or did it decline? That's something you should look at. So what has been the trend over the years between 2021 and 2025? Have they been increasing their revenue? Look at their profits after tax. So that's just if you go down a little bit on that their financial statement, you see profits after tax. So that is the actual profits they have after accounting for all their expenses, their business expenses. So what look at, did they make a profit, did they make a loss over time, has that been increasing, what's been the trend for that. So those would be the major line items. There are other deeper ones as well. There are some ratios that you can calculate and all that, but you said as a beginner, so I don't want to go into all that. So those would be the
No,
major things. Then
Calista, Treasure
also
has the appetite. Treasure is a bold woman. Give it hot. I believe in her. Seriously, I do.
all right. So there's some financial ratios that we use to assess the financial health or the investability of a company. So for one, you can check their price earnings ratio. If you don't know how to calculate it, you can go to like sites like investing.com and check
Sorry, please,
the
I didn't get the
company.
site.
Investing.com.
Okay.
Yeah, so you can just check that on Google, check MTN, you to bring out a couple of their ratios. So their PE ratios, their return on assets, their return on equity. So usually when you are looking at these ratios, you try to compare it with their peers, right? So if you're looking at MTN, you might want to compare it to other telecoms and companies like Airtel, right? So but Airtel is on a different, okay, let me say on that company. Let's say if you're looking at Dangote Sugar, you might want to compare it with its peers, so other companies that are doing the same thing that Dangote Sugar is doing, like Boa Foods, right? So usually when you see maybe a negative PE ratio for Dangote Sugar, you know that okay, there's something wrong with the financial health of this company. I might want to stay clear of it. Do you get? So stuff like that.
Yes,
But usually, typically, what you should do as a beginner, look at their revenue, look at their profit after tax, and then look at other news, company news surrounding the company basically, and yeah, should be good to go. So just to add, so a lot of this work has been done by research analysts. So like I said, subscribe to the mailing list of some research houses, ARM, Cardinal Stone, Coronation. Subscribe to the mailing list and their stock recommendations. So you don't need to stress yourself on calculating price earnings ratio, return on asset, that sort of thing. We just tell you, oh, buy. We've done the calculation back end. So you tell you buy MTN, buy Nigerian Brewery, stuff like that, and then you can just trust us with your money. Put your money in
Calista.
those stocks.
So is it we should trust you with our money? It's all good. But that's solid. ARM has been long in the business, and so the margins they really produce for the assets they are managing has been wonderful. Well, everyone, this has been wonderful. I'll just allow two persons to say two things, like an observation. You don't have to have a question. Maybe you have an insight you want to share. Just two persons, please raise your hands, and then all our speakers will give us their parting shots, words on marble, they perspire to aspire before we call it a night. Okay, Victory, we have you raised your hand. So give us a charge or a comment. Thank you.
Yeah, all right. Thank you very much, Peter. I really appreciate this. I want to say a big thank you for bringing Clariquity to this point and also allowing young persons who have the desire to do very well financially. I mean, it's a lot for us, especially in this part of the world. And I really want to say thank you and to all the speakers that spent their time and the resources. These are things that people pay for. In fact, I would have you know that some of my persons are here. I've been checking up and following on. Some of my persons are here, and I'm very, very grateful for the opportunity and the privilege. And just on the last note on that, I think I so much agree with Ubong on when he talked about no dividends being lost. You know, I think we had this conversation, Peter, when you came for the MBA conference in Enugu here, and then we kept talking about it. I remember my parents telling me they bought shares about some years ago, over 20 years ago or so. And we just thought all those things were lost. Not until we started having these conversations. And then I discovered that, wow, a lot of money. You know, you can imagine investing about 200,000 as at early 2003 and then having to trace it at 2025. It's a lot of dividends. So I just want to say that as you give your best and you continue pushing to make your financial life better, it might not look like it now, but definitely over time, you will be happy you dedicated the energy you're giving to this at this time. Thank you very much.
Thank you, Victory. I sincerely appreciate that. Our speakers, thank you too. UB, thank you too for giving us enlightenment on that. So, second person who has the word on the marble, Chukwebuka. Okay, quickly then,
Can
so
you hear me?
that we have our speaker give the parting shots. Thank you.
Okay, thank you very much for everything. I don't know if just a suggestion, if it can be moved maybe to another place because of this hijackers and all the rest. And I don't know, Victory, please, how can I that thing you mentioned last, how can I get in touch with you? How can I send my account number to you? Thank you.
Hey, you are sending account number. Hey, Victory, let me call my account number for you ASAP.
Hey,
Okay,
calm down, guys.
thank you. So, Chukebuka, I appreciate the advice on helping us to be careful so that hijackers and trolls do not come on the call. So we probably in the next segment we'll try to move it to Zoom, and so but for now we're using Google Meet because we want to gain traction. Google Meet is easy to just join on the call. Many people are still yet to come around using Zoom, but we'll make sure to do that going forward. Perhaps our next program will do just that. But thank you. Well, to our speakers, come and give us parting shots. UB, let's start with you. What's your parting shot for us? Your perspire to never retire shot for us.
So mine is very short. I what I want to say is that I think we shouldn't forget to invest because investment is very important, not just a financial decision, but it shows your understanding of where the world is actually going to. And as you're investing, also remember that your rights obviously are protected. Those risks you take, they also keep you cautious, yes. But the truth is, you can't get the money back if you can't really take the risk. And then the last part of it is that your responsibility will also keep you grounded. So be responsible for, if you invest, check out for it, look out for it so that you can get whatever you are entitled to. So, I mean, I like to say, let's not just invest with our wallets, but at least let's invest with wisdom too. And I believe we'll do better. Thank you.
Amen, somebody. Amen. Well, over to you, Kalista. Give us something that the economist of the century would give us.
Economics of the century, okay. Okay. So I
Thank
think
you.
what I would say would be best time to start is now. Don't stall and give the excuse of, oh, I don't really understand how to invest. All the speakers have come and they've given you step by step on how to invest in the Nigerian stock market at least. So you're already armed with proper resources for that. So tomorrow I want to see the NGX stock market up because everybody on this call is buying, right? So yeah, so start now.
Thank you, Kalista. My eyes is specifically on Treasure. She must be the next billionaire investor so that Clariquity can brag about her. Thank you, Kalista.
Amen.
She said amen. So, Tolulokpe, give us the philosopher's quotes to wrap up.
So, like what Uber mentioned, investing with wisdom. I was like, I'll just say invest with your mind. Be disciplined. So, in the course of having to make money, be very ethical. I would use as a Muslim. So Muslims are not advised, like due to I think halal, they are not supposed to invest in some things, including some stocks. They can't buy banking stocks, and of recent, that affected how I buy stocks. So I see a company, I'm like, hey, this company is doing good. Let's look as if they'll be doing child labor. I won't just buy it because it's based on my ethics. I would not, because in the quest of trying to make money, I would not bend my values because it's going to affect every point of my life. And discipline, know when to get out of the market. Stop trying to look for, it can still go higher, it can still go higher. That's how people used to lose their money. Just be disciplined. Choose a particular amount that you want, and at this particular amount you're going to be out, whether it goes higher or it doesn't. And please use your spare money. Use the money that you can afford to lose. And basically, now is the right time to invest, not in the future, because you would have more responsibilities and you start calculating whether you want to throw money away or not. So invest while you're young so that your old age can reap the benefits.
Very well. Thank you so much, Tolu. So I should be focusing on halal and haram investments. Okay. Thank you. Finally, Mohammed, as the guy at the top, Mohammed, what should we take home for tonight so that we can sleep as little babies with no worries?
Yeah. Okay. Um. So beyond
Please make it
beyond
hot. Make it very hot.
beyond the
I beg
capital
you.
markets, right? I
Yeah.
think it's important we think about our life holistically, right? Just not the money alone. Think of your health, your relationship, your work, everything, right? I mean, we are young. This is the time to hit. This is when the iron is hot. This is time to hit the iron. So um, you have you're not going to have lesser responsibilities. Um, I believe most of us here are not married and don't have kids. Right? I'm just
Mohammed,
assuming
speak for
it.
yourself.
So, but yeah, this is the right time to put in the work, right? So
Yeah.
it's not easy.
True.
You There are a lot of distractions. There are a lot of other things you could be doing with your time, but you're here. Um, it's not easy. Again, anything that is going to stand the test of time, you don't build it immediately. It's not instant, right? And I know that we are the generation of instant gratification, but then you have to delay some gratification. So your health, eat well, sleep well, go to the gym, exercise. You have your friends, keep those relationship. By the way, I've sent LinkedIn connect to all of the speakers here. So keep those relationships, your family, your friends, take care of them, get in touch. Your work, it's not easy. Yes, Nigeria is not smiling. It was not smiling 10 years ago. It won't smile in the next 10 years. It's just a question of have you put in the work? Are you reaping what you sow? So it's not easy, but you have to do what you have to do. And then you pray for luck, wisdom, and blessing. Thank you very much.
Amen, somebody. Amen. Don't mind me. Ladies and gentlemen, I want to say a special thank you. Please, a round of applause for all my special speakers. Please, a round of applause. Tolu, thank you so much for taking the time to take us through the whole journey of what each and every opportunities in the capital market means. Kalista, thank you so much for telling us that risk is not anybody's mate, and we have to be careful and watchful. That advice is golden. Mohammed, thank you for feeding us like babes, making us understand it's simple and it's doable. And then UB, thank you for telling us that we have rights, we can fight, and we can win. Thank you so much. And for those who gave in their comments and questions, thank you. Apologies for any error in transmission or whatever. And sorry for the length of time we may have taken, but I see you, I honor you. Please, while you're on this call, just do us the favor of spreading the word about Clariquity, you can join us on our WhatsApp group chat. You can scan that QR code, and if you take it to our WhatsApp group chat, you can join us. It's a well-moderated WhatsApp group chat. Or you can call me or send me a message. I love to connect with young people. Please, Mohammed has emphasized connect. So please, let's build relationships. You can connect with me, and I can also reach out to the speakers so that they can connect with you in case you want at their own convenience. And so, round of applause to all of you. Please, next month, there's going to be another webinar. We plead and indulge you to help us. I know you are a speaker, you may not come back again, no problem. When you see our next flyer, help us push it. If you're on this call, please help us push our next flyer, our next webinar. I'll round up with this. I believe, and the reason why Sumari and I, that's my friend, we started Clariquity, was because we came to realize that sooner or later, in fact, it's sooner than we expected, we are going to be the one to determine the course of this nation. But unfortunately, not many young persons know that they are capable and that they can do this. Perhaps what we are doing here may look like a child's play, but I know of a certainty. It's going to spark, it's going to create, it's going to make something magical in the heart of the next person that will make this nation better, that will make our generation more respected than it is right now. And perhaps, just like we have spoken about Treasure, she may be the one that will revamp the Nigerian capital market. Well, you have taken enough time. I say thank you, ladies and gentlemen. God bless you. God bless Nigeria. And may your week be blessed.